our podcast with our host, Ed Lyon. Ed, how are you today?
I'm rocking and rolling, Neil. I hope you are. And we're going to have a surprisingly fun conversation today, considering our topic.
What is it?
All right. My guest is Lori Cook, who runs accounting and bookkeeping for one of the affiliated companies I work with, which is Remap Accounting. We're going to talk about something that most people think is boring and not very important, and we're
Mm.
going to help them understand where they're wrong. The topic is bookkeeping, which sounds not very exciting. Lori, let's get started. Why don't you introduce yourself and tell everybody what your background is so that they can understand why you're the person I'm having this conversation with?
Sure. Yeah, Ed mentioned, I'm the manager, the accounting manager of Excel Empire Extra Bookkeeping Services. So I've been doing bookkeeping and accounting for, man, over 25 years. So I started in the nonprofit arena at a small Christian camp. Then I moved into being a nonprofit auditor for a lot of different organizations. And as I was auditing books, I learned that the piece that I was auditing usually was just one piece of a big puzzle
Hmm.
and started helping a lot of nonprofits with their books. Um, then I went on, I taught a little bit at a university and I've managed some medical clinics, five of them. So all in the finance world. So yeah, I've been part of Excel Empire now for just over a year.
Okay. And you have a graduate degree beyond what most accountants have, is that correct?
Yes, I have an MBA in accounting and
Okay. So you know your stuff, and a lot of people might think that's overkill because there's an assumption that I want to knock down in this call. And the assumption is that bookkeeping is bookkeeping is bookkeeping. It's all the same, it's a commodity, and anybody can do that. We see this a lot with business owners we work with. Someone goes into business and they decide, I don't want to do the bookkeeping myself, so I'm going to bring my spouse in to do the bookkeeping. And the spouse is not a bookkeeper, has had no bookkeeping experience, has no bookkeeping knowledge, and the business owner says, here, we're going to get you QuickBooks. And Intuit is going to have you believe that it's quick when there's nothing quick about QuickBooks. There's nothing intuitive about anything that the Intuit Corporation sells. So you have a lot of people thinking bookkeeping is really it's just putting numbers in boxes and my spouse can do it and that way I can put them on payroll and they can make some extra retirement plan contributions or something like that. So Lori, you're nodding your head because you've seen this before. How does that usually work out?
uh well, like you said, people pay their monthly subscription to QuickBooks Online. They pay their $200 a month and think, good, oh, look, there's a little bit of AI in here. It must know what to do. So QuickBooks will go on autopilot for you and make up a whole nother company that you might never have intended.
Okay.
So yeah, people don't always understand expenses versus liabilities and just basic income. And that you have a lot of freedom in QuickBooks to set up your own chart of accounts however you like.
So tell
Whether
me, what is a chart of accounts?
a chart of accounts, those are the little boxes where things ought to go. So
Okay.
what is an expense? What's in a liability? What those are the different line items that people should choose, and people make up their own things of what makes sense to them. And there's an element where like, okay, intent matters. Intent matters, but AI doesn't know your intent.
Right.
So a lot of people will do things they don't know the difference. Like, well, I'm going to just write myself a check out of my company. Well, is it an owner's draw? Is it an officer's loan? Is it a reimbursement?
Okay.
Those are three different things where the intent matters, and each has a really different tax implication. So,
So this is and thank you for getting there because the way you keep your books has a measurable effect on the amount of tax you pay.
Absolutely. And that is our main goal of my role at Excel is to save people in tax money. So if they don't have good books, which we see time and time again, I think maybe 1 out of 10 has decent books coming to us.
Wow.
It
Okay. Yeah. Let's
really affect.
let's stop and
Okay.
emphasize
Yeah,
that
yeah. Yeah.
1 out of 10
Hmm.
businesses that Excel Empire works with in this program has decent books. Now, are
Correct.
most of these clients doing their books themselves, or are they coming from other accountants and bookkeepers?
Well, you would think that a lot of them being so poor would be, Aunt Judy or somebody
Right.
doing it.
Yeah.
But a lot of these do come from accountants.
Okay.
It's unfortunate.
Wow.
Okay. So, what sort of problems do they come with? Tell me about the fleas and the hair that they come with.
So many. Well, when I first started this job and I knew that books were coming from an accountant, I had an element of relief thinking, oh, good, these must be okay. And other people in the company laughed at me. And I thought, well, that's kind of arrogant. How rude.
Right.
Until I knew what they meant. And I thought, oh, a lot of accountants, though they might have the knowledge, they don't do the work to put
Okay.
things in the correct category.
Hmm.
Um, that is time and time again. A lot of owners are doing their own things. And again, put things on autopilot and let it go. If that happens, though, sometimes maybe a bank will get disconnected and we have to reconnect it. Well, then duplicate entries sometimes come through. Well, if you
Okay.
have duplicate entries on income, it looks like you make a whole lot more money than you do, which means you're paying a whole lot more taxes than you ought to because you're paying taxes on money you didn't make.
And yet, if you're not drilling down into the books, you're not going to
How do you know?
realize that you're paying tax on income you never earned.
Right,
Wow.
right.
And it's little mistakes that people don't realize they're making, but those mistakes compound, they snowball. They
They
turn into
do.
a boulder by the time they get to the bottom of the hill. Is there any rhyme or reason to whose books are good, whose books are bad, or is it just a shot in the dark?
I think it's an understanding of the business is one thing. Everybody does have a different business. So
Hmm.
we have a standard chart of accounts that is right, but not everybody, a dental practice is different than a construction company, is different than a rental
Okay.
holding company. So
Mhm.
making sure it's set up properly is probably the biggest, just not having a good foundation.
Okay.
Yeah, I would say that's the number one culprit. And then, like I said, being lazy,
Hmm.
not
Sure.
putting things, doing the work to put things where they
You
ought to
mean
go.
QuickBooks doesn't just do that for me? It
Oh
doesn't
my
do a very
goodness.
good job of it, is apparently what you're saying.
That is
And
what I'm saying.
you get, does this have anything to do with the size of the business? I'm thinking of a company that you work with that's they're in the entertainment industry and it's a $30 million a year company, and that's the kind of thing that you'd expect. They'd have terrific books. And what happened when you looked inside, when you opened up the hood?
Oh, what a mess. What a mess. And I worked with all their accountants, a lot of them, a whole room of them.
Okay.
Things they had a chart of accounts with oh, only like 5 lines in one place. You can't run that kind of money through and actually pay correct taxes, putting things in. It's like a piggy bank. That one
Okay.
was so yeah, that one was a mess. We added a lot. We had to they ran a lot of spreadsheets. QuickBooks did do more than they gave it credit for. Had to
Okay.
move a lot of Excel spreadsheet information into their QuickBooks.
Okay.
That was a lot.
So when you take on a new client, you're typically doing cleanup duty.
We are. We
Hmm.
are. Yep.
And how much does that take per client? Obviously, it can vary, but is this something that you can fix in an hour? Is it something that you can
No,
fix in a
th-
week?
no, not usually, and it depends on how far back we're going. So
Okay.
it usually takes us a good month, and a lot of that is a lot of conversations with the client. Like,
Hmm.
what was going on here? Oh, you started another. business and didn't tell us and stuck it in there and
Okay.
things like that. Yeah, what's mixing personal expenses with business expenses? Yeah, a lot of separating those out. That takes a lot of time.
Okay. So the lesson here is that bookkeeping really, so the first lesson, when it ties into taxes, is that bookkeeping really matters. If
It
you
does.
don't get the books right, you're not going to get the tax right. And if you end up paying a lot more tax than you legally owe, that's a problem. If you end up paying a lot less tax than you should legally be paying, that's a problem as well. That's a liability. And if you get audited, you're going to end up writing a big check and you're going to be really surprised because you thought you had done everything right. So, bookkeeping is important as far as the taxes are concerned, and not all bookkeepers are the same, not all accountants are the same, certainly not all clients are the same. Can you Do you have a story in the back of your mind where you could say, what's been the most expensive mistake that you have seen?
Man. Yeah, I have a couple, man. I think those duplicate expenses, we had a client, I kind of peeked at his books and I said, "Do you want us to do your prior year?" And he said, "No, no, no. We did it. Aunt Susie was great. Somebody else is going to do our taxes."
Hmm.
Okay. Called me on the night of April 14th. He's like, "Lori, it's huge. This doesn't look right. Can you just look at it?" And I said, "Oh, okay, I'll look quick." And it was the duplicate entries on all of his income.
Okay.
So I said, "Oh, this is your problem." So thankfully, then he contracted us to fix all of the prior year. We got rid of all
Mhm.
those duplicates, saved him $17,000 on an amended return.
Mm.
Nice.
So
Okay.
that
So
was
that's the
that was
value of
huge.
good bookkeeping. So that we're going to
Yeah.
use that as our number, Neil. The value of good bookkeeping is $17,000.
Now I'm
Yeah.
going to bring up things that the problem is that a lot of these pay services and different things, they duplicate things and QuickBooks is not able to read it well. So there's
Right.
a lot of those issues where you're like, well, I might as well manually do it instead of going and trusting these automations, which will foul things up.
Right. Right.
Hmm.
And I have another story. Ed, you asked me story. This is dangerous because I have a lot of them. But
It makes
we
for a good
had
podcast.
what?
It makes for a good podcast if you got a lot of good stories.
Oh, I do. Yeah, we had a vet clinic going for a sale, cleaning
Hmm.
up the books to make sure it was appropriate for a sale. Everything was reconciled, but I was going through, we had AI look at it, but we need people, and this is
Hmm.
why, looking and noticed, I thought, man, your cremation fees are huge. You're a vet clinic,
Uh-oh.
cremation, 35% of your income is that. So I asked her, I said, "Do you
That's
think
not a
this
very
is—"
good vet.
That's what she said. She said, "We look like terrible doctors. Nobody's going to buy our." I said,
Right.
"Okay." And that was an AI thing, so we fixed it.
Okay. Well, but you raise a really good point because a lot of business owners at some point they're ready to hang it up. They're
Yeah,
ready to retire, they're ready to sell their business and turn the equity in the business into a pension. And that's the sort of thing that we deal with all the time on the planning side. But typically when a veterinarian or another business owner wants to sell their business, they're going to reach a high level agreement with a buyer and they're going to settle on a price. The price is usually going to be a multiple of EBITDA, the earnings before interest, taxes, depreciation, and amortization. They'll settle on that and then they're going to go into what's called a due diligence period, meaning that the accountants for the buyer are going to look at the books. And at that point, they're going to see, oh, wait a minute, we've got duplicate billing, we've got duplicate income, the company didn't really make this much money. Oh, 25% of the expenses are for cremating these poor animals that didn't, that's a lot of money to send animals over the Rainbow Bridge there. But the sale falls apart. The
mhm,
sale falls apart, and I have seen business sales fall apart because the books and records were such a mess that the buyer said, "You know what? I can't trust the information that I'm being given by the seller." The buyer needs to be able to trust that information, and the bookkeeping is the information. We've all heard Accounting is the language of business, and if the books aren't good, what buyer is going to trust a seller? So it's something that really needs to be done properly before that due diligence period starts. If you're selling your business, the last thing that you want to discover is that you've overbooked revenue for, whatever percentage consistently, and all of a sudden your $3 million business sale that was going to be enough for you to retire on is now a $2.4 million sale, and suddenly you're not feeling so confident about retiring on it. So, what is this is fun talking about the problem. I love the horror stories. And if any more pop into mind, feel free to tell us. But let's talk about the solution now. What is the solution? What are some best practices that listeners can use to find and hire an accounting service? And what should they expect from someone who does it right?
Yeah. Well, number one, their books really need to be reconciled on a monthly basis. A lot of accountants will make sure QuickBooks kind of matches and do it at the end of the year. Unfortunately, at the end of the year, if there's needs to be major changes or even some tax strategies, it's
Mhm.
often too late to
Okay.
initiate some of those if you don't have good books throughout the year. So that's number one.
Okay.
Um, the number two, your accountant should be asking you a lot of why questions.
A lot of
Unless
why questions. Okay,
why, yeah,
why is that?
why did you do that? Why? Because intent matters.
Hmm.
And a meal with your staff is taxed different than a meal with your client. So why did you go to Arby's?
Okay.
You know, and then training, like,
Mhm.
okay, next time let's make sure we record it this way. So a lot of questions, and we can't know as accountants, what you write all your checks for. So at the end of every month, you should get a list from your accountant saying, what is this for? What is this for? Okay, you went to Aruba. Great. Was that a business trip? Was that vacation? What were you doing in Aruba? I mean, they're pretty nosy. Accountants are nosy, but you want that because that's how you're going to get good books.
Okay. Are there any initials after names or accreditations that I should be specifically looking for? Everybody thinks CPA is the gold standard, but not necessarily so. And you've told me that a lot of times you get books from lazy accountants. The
We
CPA
do.
doesn't save anything. Is there any special certification or program to keep an eye out for?
Well, an EA is also can
Hmm.
an enrolled agent. It's an IRS tax designation that's valid in all 50 states. So that
Okay.
is also um, valid
Right,
and
but
good.
that's somebody. An enrolled agent is someone who can represent you in front of the IRS on
Yes,
tax matters.
yes.
I'm looking for something a little more fundamental on or day to day. How can somebody know that they're sitting down with a good accountant? What questions should they ask the accountant? We're talking expectations. Expectations is the books will be reconciled with the bank account on a monthly basis. That sounds easy and cut and dried. What other sort of cut and dried questions should a business owner be asking when they choose an accountant?
Well, another, and I'm not sure this is always cut and dry, but what your accountant has access to as
Okay.
well. And I feel like you're fishing for something that I'm not saying though.
No,
So
no, I'm not fishing
add
for
to it.
anything in
Okay.
particular. And in fact, the whole point of the whole lesson from this conversation is that this is not cut and dried.
Okay.
Bookkeeping is not
I
cut
would
and
say,
dried. It's not something that you can just tell QuickBooks to use AI and we're going to put
yeah.
stuff in this category or we're going to break it out. You could have multiple categories. For example, I'm going to send a wire transfer to somebody tomorrow, and I'm going to have to record the money going out in the wire transfer. I'm also going to have to record the fee that
Mhm.
goes out with the wire transfer. So that's a transaction that's going to go into two different places. One place is going to be the contractor who's actually getting the wire. The other is the $15 bank fee
Yes.
that the bank is going to charge to send the wire. So transactions that
Another
look
thing is,
simple may not be.
yeah. And another thing is transparency.
Okay.
Accountants can, they, you can look at a client and realize, oh, you're in DoorDash a lot, but, and I have, I have access to your bank accounts, and what kind of access do I have? And
Okay.
making sure that they are showing you all of your money, where it goes and how it comes in every month. And I
Okay.
say that because we've had recently, just recently, two different scenarios where a client came in completely unaware of their books. The books were a mess. They actually had a CPA as their prior bookkeeper and accountant.
Hmm.
They had a negative 180,000 in income. What?
Okay. Had
I
they
know.
really lost 180,000?
And we thought, really? We went through reconciled, we're like, no, it's 40,000. But the interesting thing is, we noticed, and did not tell her prior CPA that we were looking at her books. We said there's a scheduled year-end payment for about $80,000 to your accountant. Did you know that? Do you pay her annually $80,000 at the year end? The client had no idea. She said, "What?"
Oh,
I
wow.
said, "Well, that's a huh." So that CPA was fired.
Was
But
fired. Were they
but
reported to the state accountancy board?
well, it was actually it was never yes. It was actually never initiated, but it was in the books. It
Okay.
was a scheduled payment for year end, and we said, did you want to do that? Did you want to pay her? And we've seen different things like that before, where people need to keep an eye on their money, where it goes, and then who has access to it. So an accountant that has accountant access and
Hmm.
not owner access. And we tell
Hmm.
clients all the time, these are your books. This is your money. We'll
Hmm.
give you recommendations, but we also don't tell you what to do. We'll give you strong recommendations,
Hmm.
but it's your money and your books. That's really important.
So I'm fascinated by this $80,000 that the accountant was planning on collecting. She was going to have a really nice Christmas.
I think so. Yeah,
Was it so it had been set up in QuickBooks and QuickBooks was going to move the money? It wasn't set up through the bank account.
correct.
Okay.
Correct. And the QuickBooks was connected to her bank account.
Okay.
So, yep.
So it really is it's an intimate and fiduciary relationship.
Yes, absolutely.
Wow.
I wonder how many other people she was doing that to.
I don't know. I don't know. So, actually, I think that was the only really um shady thing that we found,
Uh-huh.
other
Well,
than
oh
having
come
a
on, she's
really,
so
really bad
shady.
books.
She's so shady you could throw a picnic under her.
Yeah, I'm not sure who else she's doing books for anymore.
Hmm.
I hope nobody.
Right. Well, 11 cents an hour. Somebody's got to keep the books for the warden in the prison. I think that was half the plot of the Shawshank Redemption.
I think so.
All right. So, how much is a good accountant going to cost versus a lousy accountant? It sounds like a lousy account. Well, we've learned today a lousy accountant is $80,000 a year,
Yes.
right?
Yes.
So a lot of business owners are concerned with how much they pay for various services, and they may look for cheap bookkeeping. Tell us a little bit about whether that's a real economy or not. And I suspect I know where you're going to go with the answer, but I'd rather you make the case than me.
Yes, there are a lot of cheap bookkeepers out there.
Hmm.
And kind of the cliche saying, you get what you pay for,
Right,
has been true,
right.
at least in my experience. And I don't want to just blanket all cheap bookkeepers out there. However, in my experience, you do
Well,
get
and it's
what you
real
pay for.
experience. It's
It is.
25 years of
Yeah.
experience.
Yeah. So if somebody's going to do your books for $100 a month, well, there is a question, what kind of books do you have? How many
Mhm.
accounts do you
Right.
have? How many? But you do want to ask, okay, now what are they doing for you?
Hmm.
Or did they just set up your QuickBooks online and let it go?
Well, so what is somebody the $197 a month bookkeeper or the $97 a month bookkeeper, the one who's doing it cheap? How are they keeping their fees so low?
By having so many accounts that they probably don't have time to have a conversation with you.
Okay, so
So
it's a volume play
it is.
and it's a low touch service.
Yep.
They're not
Yep.
going to be asking the nosy questions that you've talked
Nope.
about.
They're
They're
gonna
not.
set it up like Taco Bell, and everybody's gonna get a crunchy taco. That's how it's gonna be.
I
So,
like crunchy tacos,
well, as do
but
I.
sometimes I
But
like a
sometimes,
cheesy quesadilla.
yeah.
Well, but it sounds like they're not going to be asking the sorts of
No,
questions. They're not going to be doing frequent reconciliations. They're really not going to care what
no.
happens to your business, so they're not going to step in before
And
problems.
they surely don't care about the tax implications.
Hmm. Right. They're just providing a service and giving the minimum level. Are they going to be relying on AI fully? Are they going to be using foreign accountants? Are they going to be using U.S. accountants? I'm guessing that $200 a month bookkeeping service, there's no actual human being within 1,000 miles of the United States that's touching those books.
That is likely true. Yes.
Okay. So for a more value oriented, for a more expensive service where they're delivering value rather than just a cheap price, uh, is there a guideline fee range that somebody should be looking for, or is that all dependent on the business?
Um, in my line, we have a set price.
Okay.
It's
Yep.
13.20 a month, and you get an excellent accountant who you get to know their name. You can call them and text them and talk about to them. They are
Okay.
going to be the person who
And are they,
asks
are
you.
they in the Philippines or are they in the
No,
United
they are
States?
here in the United States.
Okay.
So if they're going to categorize and they know what Arby's is, they know you've been to Arby's every day for 2 weeks. They're not your doctor. They're not going to talk to you about your cholesterol. They might.
Right.
So you're going to get that person and that person to ask questions to.
Okay.
Should I buy? Should I lease this car? They might not tell you what kind of, you might ask them what kind of car that's, they might actually answer. I don't know. No, you need a motorcycle. No, they don't. Well, again, we don't tell you what to do, but they're going to have a relationship with you.
Okay. So tell me about that service. I have mentioned the extra service. You've mentioned it a couple of times. I want to look at this as a model of quality bookkeeping based service, but where bookkeeping is not just an afterthought, it's the foundation. Tell me about extra. Tell me about the philosophy behind extra and what clients get besides having an actual American that they can pick up the phone and call.
Right. So extra stands for Expert Tax Reduction Accounting. So
Okay.
not only are we as accountants doing the books, we're looking backwards, making sure everything is categorized appropriately. We're
Okay.
doing that for the purpose of looking ahead and the tax implications and the taxes that we all have to pay, but
Okay.
you don't need to pay a penny more than you have to. And so we're making sure all the T's are crossed and the I's are dotted
Hmm.
so that you're paying the right amount.
Okay. And so it's a flat fee.
It is. Yep.
So you're not nickel and diming people.
We're not. And that includes the QuickBooks paid subscription.
Okay.
It also, like I said, we're looking back to make sure everything is correct, but
Hmm.
looking forward. So in that, there's tax planning meetings,
Hmm.
quarterly tax planning meetings that are in the schedule to have with each client so that like I said, if we have a big expense that needs to be, it's really hard for a construction guy to buy a tractor in December. He really needs to know in at least September what he's looking for. So if he doesn't know where he's at, or even that that should be an option or an idea that would be in his best tax benefit,
Okay.
yeah, we need to know that.
Okay. All right. I like the flat fee myself as well. One thing I've noticed with accountants in the 21 years now that I've been working with accountants is they don't they want to match their bill to the amount of work. So there might be three, one client is going to take 3 hours a week, another client is going to take 2 hours and 45 minutes a week, and they're going to want to make sure that the client who takes more work pays more, as opposed to my own philosophy is, look, it's all going to come out in the wash.
Hmm.
So one client will take more of your time, one client will take less of your time, and then 6 months later it'll switch, and the one who's
True.
taking less will take more. And is it really worth knocking yourself out to capture those tiny differences between clients and nickel and dime the ones that are using more? Because nobody likes to feel nickel and dime. People will do it, but they'll grumble about it. When I fly Delta, and I pay more for my ticket up front. If you fly Spirit Air, you're going to pay a third as much for the ticket, but then you're going to pay for your luggage, you're going to pay for your carry on, you're going to pay to pick your seat, you're going to pay to get a drink of water. Pretty soon, they're going to be coin operated toilets on the plane. And by the time it's all said and done, you're paying Spirit Air nearly as much as you're paying Delta. You're just not getting as good an experience. So I think a lot of people prefer to just, they're going to know all in. Okay, $13.20 a month, and that's going to cover my QuickBooks subscription. And if I've got a question, I'm going to pick up the phone and I'm going to call, and I'm not going to get charged for that. And I'm expecting a quarterly tax planning meeting and a year-end planning meeting, and I'm not going to get charged extra for that. We're just going to roll it all in, and there's not going to be an $80,000 bill at the end of the year that
Correct.
surprises me.
And and it also includes a personal tax return and a business return.
Okay. Okay. So
So that's
all of
also
that is in.
included. Yep. And the whole goal of that is ease. If you go elsewhere, they're going to ask you, okay, can I have a P&L? Where's your balance sheet? We have
Mhm.
that
Right.
in-house.
Already have that in house ready to go. And
Yep.
the tax preparer knows that they are quality books.
Yep. Yep. And
Okay.
they also know everything else that's going on. They know your goals. They know, okay, we're getting ready for a sale that's
Hmm.
coming up. Where you're getting ready to expand next year. Okay, we want to build another addition. We have those in our mind because we know you.
Okay. All right. So when people think that bookkeeping is bookkeeping and bookkeeping, and I can just give the books to my wife and it's easy, she can figure it out, that just simply isn't true.
It simply isn't true.
All right. Well, that's a good myth to bust. And tell me a little bit about how viewers can get in touch with you if they're interested in your service.
Yeah, so excelempire.com is our website.
Okay.
You can schedule a meeting at your convenience with someone who can have a conversation first. How many entities do you own? How many rentals? Um, are you a partner? Are you a sole owner? There's a lot of questions, and your price is going to be the same, but that is going to match you to an accountant that knows your business better.
Okay.
So that's why we have those questions, and then we keep asking questions all the way through.
Okay.
All right.
Well, Laura, you've done a great job answering my questions on this, your first podcast. You came through like a champ. So thanks so much. We appreciate your time. Neil, thanks as always.
Yeah, absolutely, Ed. And what I really enjoyed was the fact that bookkeeping's not easy, and
No.
find the right bookkeeper. And
Yep.
that's it. If they can't answer these kind of questions that you listened on this podcast, you only have one option then,
Right.
because you don't want to be going through in the last minute saying, I got to get my books together, or I'm going to be audited, and you're in trouble. Or you want to make sure you get pay the right taxes.
Yeah. Yeah.
Period. So, all right. Okay. And you can check out again, like, share, and subscribe this podcast, and write an Apple Podcast review. We appreciate it, guys. Thanks again.
Thanks.
All right. That was a special simulcast of the Neil Haley Show and the Lion Share podcast, guys. Take care.